back at it again. It's been a while since a full video, kind of doing some shorts here and there. It's been a crazy week, especially for you guys investing. Well, before we get started, I want to say like and subscribe. Help me out here. Get me up to 100 subscribers. I'd really appreciate it. Give me some likes. Like it, hate it. You know the routine. Comment down below. Do what you got to do. Well, we're back here. It's kind of a late day. I'm kind of in here late at the office. As you guys know, I run a moving and cleaning company. It's been crazy. We're ups and downs, left and right. But we're all here to talk about what is the recession. Are we in it? Are we not in it? And my opinion on it. But first, before we get into that, let's go over some quick things about the market. Been up quite a bit today. I know my portfolio has been up crazy. I'm over almost 10K. It's been a crazy day on this test portfolio. Overall, my personal holdings are about 5%, so we're looking good. We got a lot of great things moving up. As always, XRP, it's kind of really taking off. It's coming back. I kept saying buy in right here at the 32 cents. Really get in there. And it's just rising. And it's still 37 cents is still a good buy. That guy Jeb ran out of XRP to sell, so we're probably going to be looking at a bull run on XRP. And I think finally we'll have our first altcoin that goes differently than the rest of the market. So, because it's been kind of stagnant the whole time, right? If we look at it for, a month, we're still kind of up. But if we look at it for a year, now this is right around where I got in, right around here. And it's just been going down. Now, I believe it can hit this area. The SEC lawsuit's about to come to a close, hopefully eventually. I'm banking on it ending this year. I do think that will. I don't think it'll get it to $10. Everyone's saying $10. Me being a long-time broker and trader, I don't see that happening. However, I do see it going to $2. I think that's a good deal. And if you're getting in the 30 cent range, you're going to make some money, regardless of where it lands. So even if you get $1.50, you get $2, or if you do get $10, just keep getting in there. Keep dollar cost averaging in. $100 gets you quite a bit. The other place I've been really focusing on, I don't have it saved on here, but it should be here somewhere. There's one of them, DOT. DOT, I'm going to tell you right now, we are going to make our next big buy order on DOT. It's a good one to get into. However, DOT really is my hedge against against Atom, and Atom has been taking off. It's back over $10. So these are the things I'm kind of looking into. I couldn't pull up. I'm at my desktop computer at work at my office, so I can't quite pull up my Robinhood account for the trial portfolio that we are running, but I can kind of show you. Oops, not that one. This one here. I want to show you the numbers of my moving company. But here we go. So the test portfolio, last I recorded it, I'm kind of prepping it, but this was maybe a few days ago. So it's kind of here. I did put a little bit of money into it, a couple $100. I'm trying to stick within that budget of a $50,000 salary. So that means getting about $1,600 a week or a paycheck after taxes. So as you know, beginning of the month, you want to make sure you pay all your bills, pay your rent, pay your credit cards, pay your cell phone bill. You want to pay all that. Then you start putting some money in. But as you can see here, it also has a base in stock. So don't put all your eggs in one basket. Put something in elsewhere. But as you can see, we've been doing this for a solid 4 months. April's when we started this. Solid 4 months. Here we are, almost 9,000, possibly over 10,000 if I add up everything again. This is crazy. We have made, I think, about $5,600 return off of it. As you know, I'm going to go over here, back over. I'm going to show you. We do not do these trial portfolios with fake money. This is real money. when I tell you to buy too, I'm putting my money in there. So I'm letting you guys know that it's real money. We're backing it up with real money. So if there's a loss, then the real money is gone. If there's a win, real money is here. So just want to let you guys know, we're not playing with, you're not doing those simulation accounts. This is real money. This is everything here that we're investing in. And this is how I would break up a portfolio if you had limited access. So as you see, most of it's in here, and a lot of it's in the Pro DeFi wallet, in the Kronos DeFi wallet, or what is it, crypto.com. A lot of it's in there. Now, I keep telling you guys, I'm relatively new to crypto. I knew of it, but never really learned about it. I didn't really get into it until the beginning of this year, and let me tell you, I really wish I had gotten in about 8 years ago when I had the chance. And you really need to just accept the fact that, I just really have to accept the fact that, hey, I took an L on that. It's time to stop taking L's. It's time to get in this, time to learn it. It is probably going to be in the future. It is going to be like the fourth leg of your investment portfolio. Right, if we go back here, as you see here, we're at a 1 trillion market cap. So we broke past that. Last time I looked, it was down there. But what's crazy is this is the first time for me being in the crypto market at the Greed and Fear Index. Let's take a look at it right now. Let's take a look at it here. The Greed and Fear Index, when I looked at it this morning, I think it was a 32. I think it was a 32. Let's take a look. And 39, it's rising. Okay, so we're kind of getting closer towards kind of this neutral area and then into euphoric. As you can see, for most of the time in the crypto market, this is where I sat, right here. This is where I sat. Every day I came in, we were in the teens or we were in the single digits. Now, finally, during my time in investing, the fear index is 39. So I can't wait to see how my choices have made when it gets up to here, and to see how my portfolio picks worked out. I'm going to celebrate the victories with you guys. Definitely going to show that with you. But now I've got kind of a cover and update on everything. I also do want to say my dividend portfolio is doing really well. I'm just getting paid all my dividends. You want lifestyle changing money, you're going to have to build a dividend portfolio account. I know a lot of you crypto ride or die people are not for stocks, but I'm telling you, as a trader, that's a good way to hedge your bets and keep your portfolio going, keep your money going, keep your solid base going, because you want to rely on your 401k or pension, your Roth IRA investments, then your Social Security, then your your dividend and portfolio investments. Now we're going to add cryptocurrency, and then of course real estate. Those are the things you really want to get in and start building, especially if you guys are young. I know a lot of you guys are in your early 20s. Trust me, if you focus on that right now in your early 20s, by the time you're 35, you'll be set for life. And then you can take the next step and really grow your earning income potential. But anyway, let's go over here, kind of U.S. markets. I'm not really too excited about the U.S. market because I think we're kind of going left and right now. We just kind of been sitting here stagnant for a while. Although stocks, I think, have lost about 20-23% as a whole since the beginning of the year. Crypto already did its 80% dump. The Fed just raised the rates up to what everyone anticipated, the 0.75% basis points. So that means if you got banks in your portfolio, like I have, like I've been telling you, the smart bank choices, if you've been paying attention, watch my other videos, you will see that you're going to make money off of those bank choices. Like I said, you want to get Bank of America. Their leverage great. Got a great risk factor, can pass the overwhelming stress test, all that stuff. Also, you also want to get yourself some JP Morgan, Goldman Sachs, or Continental Standard. These guys are going to make money hand over fist. Now, you don't want to get into BlackRock just yet. They lost $1.7 trillion. So, not quite what I want to get into right now. I would tell you, wait for that sucker to go down under 400. then we're going to start buying into it. And that's going to be kind of like your later buy when you've built up your income, you built up your career path that you're going, build it up to where, now you're making maybe 80, 90, $100,000 a year. Then you can start, getting 1 or 2 shares of those, because that is kind of expensive. However, the dividend payment makes it worthwhile. But right now, they're taking some L's, taking some losses. I don't know about you, but 1.7 trillion is a huge, huge amount of money, and that's more than a lot of countries out there. So expect them to start leveraging off their real estate, which is why I think we're in a recession, but we're not in the recession that people are talking about. So now we're going to get to the nitty and gritty of the video. The recession is not going to be as bad as everyone thinks, in my opinion. Now, the reason why I say that is this is the sole reason why I'm going to say this, is because, yes, default mortgage rates are higher. However, they're increasing off of a low percentage and going up. Not great. There's a rumor out there with it being up 700%. I mean, up 700% off 0.5% isn't that much. We want to start panicking when we're hitting 20, 30, 40% of mortgages issued for the year are coming back 2 years later defaulting. Now that's bad, but we're not there. We're at a standard about 2.5, 3, I think about 4.1% default rate. That's acceptable. I'll take that any day. When I was a broker, we just shrugged that stuff off in the 2000s. That's not really. Now, what I really will say is a big problem is the auto industry. Now, we had an area where a lot of people were getting extra stimulus money. People sat around, people had a lot of time, people trying to be YouTube millionaires, and they were financing cars they could not afford. So once all those payments stopped, the YouTube revenue dropped, everything's dropping, those cars are now coming to the repossession market. And I'm talking about Lamborghinis, McLarens, Mercedes, BMWs, but I'm also talking about Mustangs, regular cars, everyday drivers. Those things are coming. These $40,000, $50,000, $60,000 cars are hitting the market in droves. So if you're smart and you're like me, you've been waiting to buy for a car right around this time, that's a good idea. However, a lot of people, they bought, flexed, now it's gone. Now we're going to suffer through the car market bubble. Kind of the same thing that the real estate bubble did, except for this ain't going to make anyone broke. It's only going to make a lot of dealerships go broke. A lot of the used car dealers disappear, and I have seen them disappear. I'm in the kind of the Midwest area of the country, and we got these buy here, pay here centers. I think 1, 2, 3, 4 of those companies I know have been in this area since I've been here, and I've been living here since 2014. Have gone out of business, and they have like at least 7 or 8 sites in this area that I know of. So that's showing you the problem that's happening in the auto industry. So basically, you have banks repossessing, holding it off, inflating the supply prices, which really doesn't exist, because I see ones that are making it with full lots, and I see the ones that are struggling with empty lots. So let me tell you something. This is going to burst, and we're going to see who rides the top. However, I still have my strong pick on Ford making it happen, because instead of focusing on the vehicle, they are focusing on the customer experience. That's how you're going to survive this recession, is finding the right companies to get through it in there. Now, my third reason why I don't think this is going to be as bad is just from my experience as loans. There are not a lot of bad loans out there. There's not a lot. Now, I do believe that all the people that did all the real estate guru stuff, that tried to over leverage and finance on their deals and on trying to get rental properties, they're the ones that are going to get liquidated. Anyone who's over leveraged is going to get liquidated. That's what's going to happen. That's what's going to happen. And it's hard to pinpoint when that'll happen, because you never know, because if they register them properly as businesses, it's a little easier to get instantaneous financing, which really is just like getting financing within 10, 20 days for a business, for business capital purposes, can be done. However, we also don't know the state of their credit scores. I think a lot of these people are just they're gonna bite the dust. And it's just like right now, you're not seeing a lot of your favorite YouTubers in finance and crypto because over the last 6 weeks, for most of the year, because they just died off. We had drops and crashes and craziness going on, and it's dropping off. Also, now my final point about us not being in as bad as recession is that the crypto market kind of saved itself. It's done. Seems like, don't, because sometimes it can seem like it, but still keep going, is that it seems like the major bankruptcies are done. You might have one or two more, but the major bankruptcies kind of shook out the market and went. But it goes to the point, there's people playing high and dangerous with their money. And it's not whales, it's not smart money, it is the retail investor. The retail investor is constantly leveraging. I've talked to many people that I know that are retail investors that have somewhere between $50,000 and $200,000 in crypto, and they are just leveraging and doing marginal shorts and calls and puts, all that stuff. And that's not the way to go, especially on a highly volatile issue. Now, I can't discredit shorting because I use it in stocks. If you pick a company right that you know will fail, you can make a good case for that. But I don't do it with currency, and I wouldn't do it with crypto. It's just too volatile for that. That's what's going to shake out a lot of people. So this recession is going to literally going to shake out all the people who are trying to become instant rich for nothing and quickly, and they're going back to work. And I'm telling you right now, as a business owner, I can tell you right now, it was rough the last couple months. It was, beginning part of the year, couldn't find people, had tons of business. Still tons of business, started finding people. Now I have people coming out of the woodwork everywhere applying, and business is starting to slow down. I even cut my hiring, my staff. Like I'm trim as trim can be right now, and I still got to trim down some more. So I got leases on there. Luckily, some of them are getting paid off in a month or two. So that's going to trim me down because I'm not getting any more trucks for my moving company. So I'm telling you right now, that's my viewpoint as a business owner, is that we are not in that bad of a recession. We will make it out of this. The next 2 years are going to be critical for anyone who's doing smart investing. Like I say, if you follow my portfolios, I've always made money. That's how I did it. I made 7 figures working for Bank of America, working for big hedge funds, working for privately for wealthy, high net worth individuals. I'm telling you, that is it. But like I said, as always, I'm not a licensed financial planner. I'm a broker. I don't care. I just do your trade and do it. You can follow me. You might win, you might lose. Just remember, my trade, I'm going to tell you right now, I'm 8 out of 10, I'm going to lose. 2 of them are going to win. But if I win on 2, I usually win pretty big. But keep that in mind, that my portfolio is based off of my personal judgment, my personal effort, and what I'm doing, and the research I'm doing. Keyword, research. Please do your research. Please understand. If you don't understand anything, don't go to YouTube only for your advice. Go find a certified financial planner. A lot of them right now are doing free consultations to help you understand financial terms and increase your financial literacy. That is very key. I know quite a few financial planners that do high net worth individuals that are doing free consultations for anyone looking to just start their investment journey. There are people out there trying to help you. Just understand the help is limited. You'll get that free consultation maybe the first or second time, but you're going to have to start investing with them and following your plan. They do a lot of work. They will get you there. Always contact a certified financial planner. Make sure they're certified. Make sure they got that plaque. Make sure they got that certificate. Make sure they got their Series 6. And always, just like if you're going to a doctor, get a goddamn second opinion. Don't just go to one person and say, oh, okay. Go to someone else, get a second opinion. With that said, like and subscribe. Get me up to 100 subscribers. Really appreciate doing this for you guys and just trying to show my insight of how I invest, how I do things. Just certain things that are going in my mind that help me invest. And I always try to share it with everyone. I share it for free for those who physically meet me. So I'm sharing it for free on YouTube. All you got to do is like so we can get the word out. Thank you guys. Like and subscribe. I'll talk to you guys later. That video on is Vault into a Scam is coming, I promise. And also the video on Robinhood. But comment if you reach the end of the video.